Hello, everyone. My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is September 29th, 2021, and Bitcoin is looking tricky. Bitcoin's looking tricky. All right. We literally about 8 hours ago just broke out of a 48-hour descending channel. Okay. And if you're subscribed to the channel, you'll know that channels are special in that they're concentrated regions of accumulation, right? And any breakout of the channel is violent, meaning the price action has a lot of momentum and targets are typically hit their high probability. So the breakout was to the upside. I expected, let me speak for myself, I and many in the community expected that this breakout was going to be to the downside, but we never actually got a breakout to the downside, right? This was something that we were thinking, okay, that's definitely going to happen, and the result is going to be a dive into the crypto abyss, probably most likely down to 38, 37,000. People were calling for 36. That still may happen. Anything still may happen, right? This is all probabilistic, right? That's technical analysis. There's no crystal ball. If anybody's telling you that they know for a fact, then they don't know what they're talking about. But this right now, at this moment, is looking like the most tricky, the most nasty bear trap I've personally ever seen. Maybe I'm a prisoner of the moment. Maybe this is recency bias, but I've never seen a fake out like this. I mean, look at this. It looks hideous. You have a double top. You have multiple attempts to break out to the upside, multiple failures, even within this channel. Obviously, we're on low time frame. So let's go into a higher time frame. Go to the 4-hourly. You see a lot of wicks to the upside, but failed breakouts, right? And finally, you get this very nice breakout to the upside with a strong green candle, not much volume. And I presume we're going to get a retest of this pretty soon. And that retest may come around here. Let's see. Let's go into even smaller time frame and see. Yeah, it's looking like we're forming some resistance here. We're forming a sort of ascending triangle. And that may do one of two things. It might break up or it may break down. Not really sure yet. There's a lot of touches to the downside, not that many to the upside. So it's looking like, let's see if we can't count some Elliott waves here. It looks like it's going to break to the upside. Why? I'm counting, this is a fourth wave. This is a complex fourth wave. Okay. If I'm counting Elliott waves. So let's do that really quickly. So this is I guess all live. You see that when you're doing your analysis, there's so many things that you can use. Whoops, that's not, well, I'll just draw that out. That was a failure. When you're doing your analysis, you want to use everything in your bag to confirm, to increase the probability that your calls are correct, right? That's the whole point. Obviously, this is the wrong business to be in if you want to be right all the time. But if you want to improve your chances of being correct, use whatever you have. Don't just use like one thing. So, right, we see an ascending triangle, and I personally don't like to characterize my patterns as being bullish or bearish. Obviously, I do it right? I have that bias, but there's always a probability, a decent probability, that certain things can break up or down, and depending on the context, that then affects, or that increases the probability one way or the other. So you have this ascending triangle, but it's preceded by a pole, right? So a flagpole. It's patterns aside, my Elliott wave theory is telling me that this is 1, 2, 3, 4. Why is this 4? It's likely to be 4 because 2 was simple, so 4 is complex. They alternate. So I'm looking for a last fifth wave here, after this correction is complete. Also, the EMAs crossed the 21, so the lower time frame EMA has crossed over the 55 and the 144. That's showing me that price action is likely to move to the upside here. So we're likely to hit this fifth wave, correct. Usually these corrections happen 62.8% of the move. So that is likely to be our retrace. I didn't really measure where the 5 should be, but let's just assume here that's where the 5 would end. Let's see. So 62.8 would be around here, right? And that's confluent with this level of support there. So I would imagine that Bitcoin would come back, retest this, and then shoot back up with some volume. And now let's zoom back out on the 4-hourly. Let's just get rid of that. Oops. Let's get rid of the Elliott wave count. Let's keep the ascending triangle. So it's going to come back and attack this 144 and all this resistance. The target for this, the technical target for this pattern, is the top of the channel. So if you break out from a descending wedge or descending triangle, descending channel, the target is the top. So our target right now is 44.5, thereabouts. So that is confluent with the top of this range. If you want to say that this is a massive trading range here, right? That's basically, well, we can extend this, right? Simply. That's basically a massive trading range. And so we're targeting the top of the trading range, 44.5. And if we happen to break out of this trading range, again, this would constitute a larger time frame channel, and that means an explosive move to the upside. I mean, this was looking ugly just 12 hours ago. And now there's hope, because that break, literally at the 11th hour, Bitcoin broke up. See, look, this is basically the last line of support for this trading range, this region of 40,500, right? And we previously said, if you're subscribed to the channel, that we believed that 40K was the low, right? Our technical low was 39.5, 39.6 on some charts. But let's just say 40K, and that's something that we had hit down here on the 21st of September. And we kept testing the bottom of the range, 1 test, 2 tests, 3 tests, 4 tests. Whereas we only tested the top of the range once. So, just probabilistically, it's unlikely, that's what I said yesterday, that we don't get a breakdown to some support down in the 30s, in the high 30s. And I estimated, based off of the targets, the technical targets of this double top, that we would hit 38, somewhere thereabouts. And that was actually the line in the sand. We could wick down into the 37s, but that was the line in the sand for this bull run, given my analysis of the Elliott wave, 2-wave kind of retracement down to between the 0.5 and the 618. And I can show that for those of you who aren't subscribed. I know there's a lot of new viewers sometimes. So let's show that really quickly. Let's see. Okay. Okay, so let's just zoom out so we can see this more clearly. We're on the 8-hourly time frame. And let's pull the fibs. So right here, if you pull the fibs for the first wave, the first impulse wave of this Elliott wave up from our previous channel, and this previous channel, and this is the next thing I'm going to talk about, this may have been a Wyckoff accumulation, a mini Wyckoff accumulation. We got one here, and we had a breakout at the 11th hour, and before that breakout, what did we get? We got a test of the lower boundary of the range, and it, just true to Wyckoff, the idea is you scare people out of their coins. So the idea is you have 3 major tests to the downside and only one, if that, test to the upside in the range. So you see, this was the Wyckoff accumulation range where you barely get a test to the upside, 3 major tests to the downside, and towards the end you get that spring phase where you break out of the range violently. So if you look, we got another version of that, it seems, right? You have your capitulation down through the bottom range, or bottom of the range. Then you're testing the top. You're coming back down, testing the bottoms a few times. It looks a little different every single time. Then you're coming for the last test, right? And then you finally get your spring. It looks like we're in the spring phase, and this was another Wyckoff accumulation. And when people say the word Wyckoff and you're looking at that theory, it's associated with manipulation. And that may not necessarily be. It may be that people are actually manipulating the price. It just may be what price action does. I'm not exactly sure, but it in a sense, it is one of those scenarios where people are very, very scared and they end up selling into fear, and they end up selling low and then buying back higher, which is what the manipulators want. If there were manipulators that wanted to do this, that's exactly how they would do it with Wyckoff accumulations and Wyckoff distributions. Okay, Wyckoff distributions is when they dump their bags on you and they sell high, and you think, oh, it's going higher, but it's not. So this is why I'm saying this may have been the biggest bear trap in modern Bitcoin history, modern Bitcoin. Bitcoin's only 12, 13 years, but obviously we have recency bias, and time moves fast these days. So I would say, this, in my time watching this space, this is a huge bear trap, because look, you have Wyckoff distribution here, another Wyckoff distribution here. They really, really want to wrest these coins out of people's hands. This is why you don't sell into fear. And you may not even want to sell into fear with the intention of buying back lower, because it's dangerous. And this is why it's dangerous, because it's so tricky. You can have the best analysts in the world, and there are many, many highly talented analysts that are swearing up and down that the price is coming down to 37 because the charts say so. Charts say a number of things, okay? Again, we talk about Wyckoff accumulation. Look at this. Zoom in for people who can't see clearly. What does this look like? Again, you have multiple tests to the downside, one single test to the upside, and a breakout. But then we come back down. Extremely tricky, extremely difficult to predict. And this is why, for those of you watching that wonder why some people say technical analysis doesn't work, this is why. Because it's extremely challenging. And even if you think there's always a probability that there's a chance that you're reading it wrong and the opposite can happen. Yeah, it doesn't mean that you're not, able to do, any analysis, any prediction. It's just you got to be really careful. Always, always, always understand that this is probabilistic. All right. So that was a huge digression. But why did I think 38 was a low? So the one wave impulse, two wave, it has to retrace to a minimum of 38.2. So that would be the 618, and a maximum of 62.8. But the average, the typical retrace of the two wave, according to Elliott wave theory, is between the 0.5 and the 382 here, which would be, in our case, between 41.5 and 38.8. This is why I said 38.8 is the line in the sand. If we retrace below 38.8, we would essentially be creating a reversal wave where we'd come back all the way down and below where this wave one started. All right. So right now, the case for the bulls, is strong. I'm going to hide this. And we're going to look at what our indicator, our vital algo indicator, is showing us to corroborate what it is we're seeing. So let's move into closer time frames. Let's get rid of these fibs. And let's turn on our indicator. And if you want this indicator, these suite of indicators, I'm going to leave a pinned comment below. You can get 25% with code SDEAN. It's always good to add to your bag. Try and get an edge. You need it. It's hard as it is. You don't want to rely on any one indicator, but use your skills and find confluence with a very quality indicator. So we're kind of noisy here, so let's zoom in and see what the indicator is showing us. First, actually, I want to show you something on the 8-hourly time frame with this indicator. Something I noticed. Wait for it to populate. Here we go. Okay, so on the 8-hourly time frame, it's showing us that there's buy pressure. There's a buy box. There's a lot of liquidity at 40,900. So basically in our range where we said, all right, this was the low, right? And there's more buying pressure between 40,500 and 39.6. But there's a big gap below 39.6 and 37.5. And if you remember, I just said I believe that 38K is the line in the sand. So according to the indicator, if we drop to 38K, we have to come between 37 and 35.8 and 37. And according to my analysis, if you go to 35.8 and 37, that's a reversal wave. That's the end of this bull run, effectively, in my estimation. So this is, I thought that interesting that the vital algo indicator was pointing to that. So let's go into the lower time frames. Let's not make this video too much longer. So on the 15-minute time frame, what are we seeing? Oh, looks like we're breaking out of this ascending triangle. Maybe the fifth wave was here. We got a diagonal fifth. We're doing our retest. If that's correct, we should see volume on this retest. Okay. And so again, on the lower time frames, that indicator is showing us that there's high activity expected, meaning so these boxes indicate dark pools or places of high liquidity. And so they're basically saying that here between 41.1 and 40,007, there's high activity, meaning you will get either a lot of buying pressure or a lot of selling pressure, and this box is green, so it's indicating high buying pressure, which means it's unlikely that we get below this. So that's Bitcoin. That was the biggest bear trap I've ever seen. Hope you guys are safe. Hope you guys are well. Like, subscribe, and share. I'll see you guys soon.